Hey folks, we're going to get into a market review. Past couple of weeks, we've been mostly in a holding pattern near all-time highs, waiting for FOMC. We had a couple of other events on the markets, obviously some of the geopolitical things going on. So it's been a little bit boring if you're a day trader. and yeah, so let's look here at the sectors on average. Again, if you've not watched the other videos, this is tracking the holdings within each sector relative to their 200 SMA, so the percentage of above or below. Looking at all of these, we're at an average of 45%. Telecom and I believe energy, no, energies has come down. So telecom, utilities was another one. But yeah, not really too hot. Growth here is only at about half the way here. Looking at 50 SMA, which is another commonly used one. And we could see a much different outlook here since about May, the start of May. So back on April 8th is when I posted a potential bottom. So it took the market a little bit longer than trade seekers to find the buy, but we did start to have a nice rally up from the lows. And now we're sitting at about 63% here, with growth being the one that I'm kind of looking at the most, being 67% for the market breadth here on the short term. Infotech sitting at 74%. That's another good one to watch. And per the PotBot, potential bottom indication tool down here, we can see that short term, really short term, just looking at the last week, decent size retracement here as we've come down. So we're floating near 2/3 are below their prior week trends, which makes sense. If we zoom in a little bit here, we could see we're just coming down a little bit. So SPY's resting very near the yearly POC, which was drug up from earlier this year. So we've been moving that up slowly. So that's healthy to see that. And looking at our volume regime, we're still looking long here, but of course we've had the geopolitical headlines over the weekend. I'm not going to bring them up because I don't want to get this video, I don't know, down rated by the algo. And so we're sitting here at some pretty nice volume. If we drop this POC, then we're going to look at a potential of 562 for our next area of support. Of course, with no strong volume in this pocket here where this gap was, we might just bounce right back up if we start to approach the 200 SMA. So that's kind of what we're looking at, but we're definitely extended here at the high end of the yearly value area, which is the lines here, 609 to 527. So yeah, I don't think there's really much to worry about yet from a technical standpoint. We're going to drop over to, I like to start with ES. We're going to start looking at ES here for the volume profile on the week. So last week, week of June 8th, we're looking at a higher end value area. So that's mostly bullish, but of course we dropped off and did not hold support. So this kind of becomes your resistance. And then of course we started the next week, this last one we just had, the week of June 15th, with a nice rally right above that value area back here. And again, not able to hold that. So 60.72 was kind of that resistance that we hit multiple times. And looking to see where we're starting this Sunday. So at the time of this recording, we're starting to create that profile, and it's not much of a shock here that on the news we have a gap down situation, and we are below the value area low for this last week. So 60.22 will be the level to beat if we're going to see any buying, and then 60.72 would be what I would consider as a resistance area. So we might do a couple things. We might reject this on the news and head lower. And if that's the case, then probably what we're going to see, zoom out here a little bit, probably what we're going to see is a struggle within this range here. We do have a slight bit of volume on the week of June 9th down here around that 59.70 area. And if we don't hold that, then we're probably looking at this area down here, which is the 59.50 area. So that's kind of what I'm looking at so far. For the NASDAQ, we're looking at weekly profiles yet again. And same kind of situation, although I will say that the NAS has been a little bit weaker, perhaps. So tech is having a harder time finding a footing here. And it's just more of that all-time high area struggle that's very typical We had this a couple years back when we sold off into some other events. And as we approached the all-time high, we ended up chopping. VIX was really squeezed low. This is just the typical kind of market regime to expect when we get back to a prior all-time high. Now, this area here is a I'm on ES mode still. NQ 872 to 821. This particular high volume area rather, will be the area to beat if we're going to see upside. And then of course we have a more high volume area here at 950 to 22 even, we'll call it. So that area right there, those are two targets if we're going to go upside. If not, then we could come as low as 671, or obviously there's value areas lower, but it's a lot of weak volume in the prior weeks down in this area until we get to this POC of 21,370-ish. So we have the Powell testimony, two of them. That could do a little bit. GDP, okay, I guess, yeah, we do have a couple of big events this week. So with that on tap, anything could happen. So we're going to have to watch out for that. Those are both at 10 a.m. That's definitely going to cause the market to squeeze until perhaps he starts talking. We might see some volatility. Core PCE is definitely going to be a market mover, as well as GDP. Everyone's watching GDP pretty hot right now due to the tariffs and all of the adjustments with the geopolitical event that we just had. There's some impact to oil, which could have some impacts. But one thing I would say is keep in mind is remember all of this stuff that occurs in the market. One, the market has a short memory, and also the market tends to price things in at different times respective to the headlines and the announcements. So there's like either a lag or not, depending on the kind of event. So it's just something to keep in mind. Yeah, I would say so far we're looking kind of bearish. Looking at the daily profiles, just pull these up. I think this almost nearly confirms exactly what I just said. So we consistently drug our value areas each day lower and lower. So that tends to be a bearish setup here. So see how we planted this up here. Next day, I'll zoom in here a little bit. Next day, we come in and look what we reject is basically the value area low from prior day. Sell off, plant more volume here. Next day, we revisit the POC from this day, sell off, and kind of land on this support here. Next day here, we did break through a couple different areas, but the top of this was the value area from over here. Sell off and make a lower value area down here. And actually, now that I'm looking at the daily POCs here, so this wiggle area here on Juneteenth, that is actually kind of where we're parking out here for this daily profile. We've got this higher volume area. It's not the value area, and it's certainly not the POC, but it is higher. So that's kind of interesting. We're parking that right there. Okay, and I'll go back here and look at ES daily profiles. Sometimes they give you just a little bit better view. Okay, same situation really as the NASDAQ. We're looking at lower value areas each day. Similar kind of action. POC rejections, prior value area rejections, dang near to the tick actually. So love volume profiles. And yeah, actually same kind of wiggle area on Juneteenth. Looking at this, maybe not as aggressive volume here on ES, but same kind of thing. We're parking out in this low volume area here. So see how it's real tiny compared to the other areas of the profile. There's not a lot of volume here. So we're starting to create volume to fill this area in here. So that's kind of interesting. Yeah, lots of downward value being established. We'll just have to kind of wait and see. We are kind of parking in this value area here actually. So anybody that was a buyer here, if they didn't sell it here, they maybe were selling. Well, no, nothing was happening here, but maybe down here on this POC. So let's look in the OPEX chart here. So OPEX, I'm noticing, is becoming a little bit more of a common topic on the internet, and last week was no exception because we had the volatility products. They were expiring. I don't know if Juneteenth actually ended up moving these. I pulled all these off from the calendar, so I think that expired on Wednesday. The equity and index expirations happened on Friday, so that actually lines up just fine. since this is SPY, Thursday's not even on here. It's coming into the 30th, Monday, so it won't be this week, it'll be next week. We will have quarterly expirations here. So that's always going to be a big event. Lots of adjustments, big liquidity, and we can see kind of what happened last time. We had a similar setup, quarterly adjustments, and then we had this big sell-off. And I don't know that I buy into the fact that the market, quote unquote, waits for these events. I think there's so many things going on that you could almost draw a line on anything and draw some conclusion. But certainly, I like how it breaks up the market into different time chunks, and it's assisting your management of risk to just consider the cyclical nature of the markets, and certainly the big machine of the markets are operating on these events. So you can see a lot of times we have double, triple expiration setups and then a move, double, triple here and then a move. So there could be something to it. I'm not going to say there isn't for sure, because options markets certainly adjust the underlying liquidity, but we also have dark pools. We have all kinds of products. So see, like this one, we had a down move, but then immediately back up. This one up move, then back down. So I don't know, but it is important to call out because it will definitely impact the market. Could adjust volatility, the VIX, all that kind of stuff will come into play when these events occur. And certainly, I'm sure there's big liquidity that is waiting for these events to make any moves. And we know that market makers, obviously trying to stay neutral, will be adjusting their positions on the underlying based on options liquidity. So definitely keep these events in mind. Heading over into the last week, let's see, Monday. So with VIX being so low, I have had probably one of the least amount of day trade months in quite some time. So VIX is low. We're not seeing a lot of energy in the market. Anybody that bought back here, bought that low in April, they're taking profits. And that might even be why we're seeing some of these volume events ticking up on the deviations. Okay, if I collapse this and make it a little bigger. So as these reach upper deviations, it starts to darken in red. The lower deviations, because of lower volume, we start to lighten into green. And you can see the higher we get up here, the more we're starting to sell potentially. All right, so it's more volume. Obviously, for every buyer, there's a seller. For every seller, there's a buyer. So take it, interpret it how you will. But I would surmise that the upper area here is going to see a lot of selling. And heading back into, if I can find my chart, heading back into this week here, what does this mean? Is that there's sellers taking profit, and I think that they're not panic selling, so we're not seeing a lot of energy. We're not seeing energy like what we saw back here. You can tell the volume signature is much different here than it is here, and obviously here. So I think any of the volume we're seeing up at this area is going to be just some profit taking, still holding. And so you're not going to see VIX doing a whole lot. And what does that mean? Well, it means a lot of, how do I want to say this, flaccid market movement. And we're having these weird gap ups that is kind of ruining the cash market. Regular trading hours aren't getting a lot of the meat. And some of these days, I've had to kind of adjust and be dynamic with my rules. I don't like to join one-sided tick. I like to wait for retracement, but we're not seeing that sometimes until 11 or 12. And we're also hitting my extension levels. The TWAP ranges indicator, we're hitting the extension levels real early, real premature from what we typically would see. So waiting on tick is the best advice I can give you. I've been saying it on my X posts. I've been saying it in the Discord. Wait for tick, because otherwise you're going to get chopped up in all this. This is absolutely maddening for an options trader, even a futures trader, anybody trying to scalp anything. When you join an engulfing candle and it's immediately, literally almost all the way back to the tick, bought back up, just to do it again and again and again, it's annoying. So trade times are taking longer, entry models are being stretched, lots of gaps, low magnitude or energy, whatever word you want to use. It's just a choppy time. And so finding your opportunities is going to require more patience, and waiting for tick has been the best thing for me. this past month, I would say at least, and certainly the last couple weeks. And you can see here, looking at the tick, we get a little bit of a 500 print, and then we get a sell. We get a strong 1,000 negative print. We get a little bit of a buy. So if you're gonna day trade, you're gonna look for big prints on tick or whatever you want to use, and you're gonna take what you can get, in my opinion. And that's pretty much what we have all been doing in the Discord on the trading floor. We talk about a lot of our trades. And one of our traders, Chach, in the Discord, I think he's alerted a handful of 100-point wins on the Nasdaq, and pretty much is one of the most consistent traders. He's waiting for tick a lot of times, waiting for tick at extreme areas. So measure your market, figure out where extreme is, and wait for tick. And it's not too difficult to do that as long as you have some discipline. And the extreme areas, how could you find those? You could find them by looking for areas of weak volume where they're at the very ends of these volume profiles. Looking here, this is an area where there's not much action. That could be extreme. We're looking at a distribution. We know that 70% of the market is going to be trading in the higher volume area. So wait for it to extend one way or the other, and then take the trade that gets you back to fair value. But here's a good day. We had a couple of bull tick prints on otherwise neutral, bearish kind of setup here, coming down below my extension level. But then we had a really nice tick bull print on a retest back up here. Sell that off. Great trade setup there. So these are like the prime trades I love to watch for, especially if you've been watching my videos for a long time. 12:30, 1:30, all the hour kickovers. 1:30 right here, boom, nice trades, nice scalp. Same kind of situation here on FOMC, though I don't really care to trade this kind of event, certainly not with options. But I can't deny that this was a nice little mean reversion type trade right inside the previous TWAP zone. And then Friday, didn't see a whole lot that I liked, but we did have a handful of different scalps events here. But I would say, overall, this was probably just not a great day for trading. You can see the New York market trend is just all over the place for price and volume. The MIT indicator here showing green and red arrows flipping like crazy. We're already past our extension level, and just not very clean delivery, but we did get a couple of nice strong sell-offs here. I don't think tick was as helpful, but this was a particular setup that I liked right here. Bull tick back on a TWAP and extension level alignment retest for a quick sell. This is your exit signal, especially in this market. So take it or leave it. That's pretty much what we're looking for in the Discord. And you can go back in the prior week and you can see a lot of this kind of setup as well. More bull tick here on prior TWAP low, sell off right into extension level. You can take that. We're on second deviation for session TWAP, so nice little mean reversion trade there. Everything's pretty much bullish, or bearish rather, on New York market. You can see. So yeah, lots of those kinds of setups. I could probably just sit here and point them all out all the time, but overall, I think we're going to end it here, folks. Covered a handful of things in the market. We're just going to have to wait and see what the market gives us. Overnight session is going to battle it out for us. Mondays, typically choppy kind of action most of the time. And looking at VIX, let me grab. Yeah, so VIX is, I didn't see we were at 20. I guess that's probably the headline. So I haven't been watching VIX as much just because it's been slammed at the lows. So a little bit of an interesting event here. But yeah, we'll just have to wait and see. Hope you all have been having a great time trading. Appreciate your support. If you've joined the Discord, a handful of you have joined, checked out the trial, stick around in the free area. Doesn't matter to me. Just love talking to different people, exchanging ideas. Different data feeds and models and all kinds of stuff. So love to have you. If you haven't joined, if you have, thanks for your support. Hope you're extracting some value from these videos. That's my aim at the end of the day. And as always, happy trading.